like them to just talk about themselves, do a bit of introduction and what they do. Thank you very much, Dumi.
Hi, everyone. Thank you so much to the AfricArena team for having me here. My name is Oluwaduni Fanibe. If you know me, then you know I insist on being called Oluwaduni, not Duni or Olu. I'm Accelerator Portfolio Manager at Google for Startups. I lead the program, so we have a variety of programs, the more popular one being the Black Founders Fund. But we have other programs aside the Black Founders Fund, which I am responsible for, building the program curriculum, connecting the founders to mentors, connecting them to investors, helping those who are fundraising raise subsequent rounds, and just taking care of our overall portfolio in Africa. Thank you.
Thank you very much, Uni.
I'll put it here. Hello. Hi, my name is Jordi. As you can hear it, I'm Nigerian. I'm joking. Investment principal at Octerra Capital, early stage VC fund based in Lagos, investing in tech-enabling companies everywhere in the continent, but also in companies based out of the continent, but operating in Africa. We have been investing since 2021 in various companies. In some companies, I will say, without any traction. So it's a pleasure to be in this panel today and to be able to speak with the different people in the panel. Thank you.
Hi, everyone. I'm Kristen Wilson, managing partner at Innovate Africa Fund. What we do at Innovate is make early stage bets on innovators that are tackling what we call wicked problems. So wicked problems are just persistent, complex, and very difficult to solve. And our mandate is to invest with them as close to day one as possible, and support them through product market fit, which sometimes includes obviously helping them to raise additional capital. But our key focus is actually around the product, the customer journey, customer discovery pieces of the journey.
Hi everyone, my name is Mia. I'm managing partner at Future Africa, the other half of Future Africa. So everything that E is, I'm not, and vice versa. So we try to complement each other, and just that I was also a founder at some point. I guess that's we have in common. And yeah, very excited to back truly early stage founders from pre-revenue stage, as this is a stage I think that gets less and less funding, unfortunately. But yeah, we're still super excited about that space for the $0 to $1 million journey.
All right, thank you very much. A big round of applause for everyone here. All right, so our session is basically on early stage powerhouses, the traits of high impact founding teams. So I don't know if this is common knowledge, but when businesses start, when people decide to come together with the idea to start a business, even without having a product or even making money or even having an MVP, whatever the case may be, what makes or breaks that business is the founding team. So I want to ask all my panelists, what is that one non-negotiable in terms of qualities that you look for in pre-seed founders, and how does it change over time from when they are like just starting to maybe proceed to Series A? So I have everyone answer that question, starting with Oladuni. Yeah.
All right, I think that, so I like the point you made about how, particularly at the early stage, as an investor, an accelerator, or whichever format you're coming in as, you don't have, I mean, things are changing now given the fundraising climate, but if you just look back at 3-4 years ago, startups without significant traction, so you couldn't look at revenue, you couldn't look at the financials, you couldn't look at all of the things, you were primarily taking a bet on the company. But to your question, and to the other point about co-founding relationships being the reasons why many startups fail, particularly at the early stage, I think it's about 65% of startups There's something that was published, I think it's called The Founder's Dilemma, I'm not very sure. But I think just building on that point, the one thing that I look at the one thing I look out for when screening startups that are really early is I'm checking for conflict. And conflict can be difficult to detect, but sometimes it's really, really easy. It's getting on a call with the co-founders and seeing that, and this is a real life example, not while I was at Google. So previously while I was at Techstars, we were screening a particular company. The co-founder, the CEO, and the COO were both on the call. And I'm not joking, every time the CEO spoke, the COO would roll her eyes. And then it was myself and my partner at the time, Oyi, and we started to just press on that, ask them how long they had worked for together, ask them what they didn't like about each other, and then they couldn't come up with tangible answers. They were trying to present like this perfect front. So not necessarily a positive, but something I'm constantly screening for with founding teams, particularly those at the early stage, is friction. Asking how you've managed issues in the past. I mean, it's easy to come on the call and say that, oh, you have a co-founders agreement, this person does that, this person does this. But like just that cohesion, it's really important. And then building on the subject of cohesion, I don't want to see, if it's 3 co-founders, I don't want to see 3 co-founders that are basically the same thing. So I don't want to see 3 people that their strengths are just in finance and sales. Like, how do you complement each other? Is there a technical person? Is there somebody who is really good with operations? Is there somebody who has, just that investor network or an IB background or whatever that is, right? And it doesn't have to be those 3 buckets I put them in. It's just that cohesion and seeing that, okay, it's 3 different people that complement each other very well. I'll pause so my panelists have other things to talk about.
One of the things that can be, I don't like to call it red flag, but when we invest in founders, especially in early stage, we are looking for market experts. We are looking for people that know what they are doing. We are looking for people that know how to build, let's say, an unfair advantage. So I would say that anybody that is unable to demonstrate that they are market experts, it can be a problem for me, because we are sector agnostic. So it means that we have a good understanding of all the different sectors, but for some of them we can, let's say, lack some knowledge. So we are really bullish on trying to invest in people that can demonstrate that. So I have an example of a company that was building an amazing product for Nigeria, and they were saying to me, well, it's an African problem. I know it's not an African problem, because they were saying that they want to go in Kenya, for example, but based on the electricity mix in Kenya, it doesn't make sense to go in Kenya. So if at the first discussion I can just see that you are not solid enough, let's say, in terms of your market expertise, it can be difficult for us, because at the end of the day, we are VC fund, even if we invest, let's say, quite early, and we know that you will also leverage additional knowledge, and we will be able also to provide you additional support. We don't want to start, let's say, from ground 0.5. So this is something also that I'm quite cautious about.
Thank you. Please, a round of applause for my panelists whenever they finish. Thank you.
Yeah, it's actually a really good sampling and very different things. I think for us, we look for customer obsession. One of the things that we kind of share is that there's so many unknown unknowns. On my founder journey, I'm constantly being humiliated by my ignorance. And my inability to kind of predict. Ian's point about knowing your customer so well that you can predict their behavior is a really important one. And it's really what we look for, is that obsession with the problem, obsession with the customer, especially at those early stages, because you perhaps don't have revenue, you perhaps haven't quite figured out the product yet. So if you are sort of neck deep in the problem, and you are obsessed over the customer, who they are, what they need, what they want, that's a really good signal for us, in addition to everything else that Oluwaduni and Jordi also shared. Yeah.
I would say for me, a first one is unique insight. Do you have an insight that is very unique to where you've worked before, what you've done before, what you've learned? And sort of I come out the first meeting sort of with an aha, right? I learned something and it makes total sense and maybe I haven't thought about it before, right? And then second would be clarity of communication. How clear are you in bringing across the business you're building, the vision, all of these things? Because it's not, important for me to get it, but it's useful if I understand it. But it also makes me think you can convince your customers, you can convince your team, etc. And I always think back about for my current portfolio, I always think back about that first call I had with that entrepreneur or that first meeting, right? And what did I think? How did it make me feel? And sort of how does it connect to where they are? So we like to talk about that quite a bit. And then I think the last one, and I think that becomes more and more important, is your ability to sell, right? I've seen quite a lot of founders, they're fantastic in what they do, great builders, great engineers, great scientists, but if you can't sell, right, particularly in these early stages where your product is really not perfect, right, you figured something out, but there's still a lot of kinks to it, but you still need to sell, you still need to show that traction to convince others, right? Ultimately, we're building a business, and I think that becomes very crucial, and I think at least one person in that founding team needs to be sort of that sales machine that can go out there and understand the customers. It comes links to your customer obsession, but then also like sort of a sense for closing deals, making things happen, etc. I think that particularly in our super early stage is super important.
All right, thank you very much, everyone. I think we should give them a round of applause. Very, very lovely insights we've had so far. So my next question will go to Kristen. So at Innovate Africa, I know you focus on transformative solutions, right? So I believe everyone would like to know what are some of those qualities that initially you underestimated or undermined, but have proved over time to be very critical for these startup founders to have, especially in the pre-seed stage?
Yeah, so I think it really ties back to some of the conversation we were having around what we look for. Because zeal, because team dynamics, and certainly because customer obsession are very important to us, I think that early on in my investing journey, not so much with the fund, but when I was an angel investor, definitely deprioritized expertise, right? So kind of like deep sector technical expertise. But I think what I've learned over time is that that's really important. And it's actually one of the things that we prioritize over traction, over everything else is, have you been in this space, or are you uniquely positioned in this space? Have you been in this space long enough, or are you uniquely positioned in this space to have significant unfair advantages as far as your ability to execute? Because, quite frankly, ideas are a dime a dozen. And what we realize is that particularly once you pass a certain threshold, it really is about your ability to execute. And that execution ability will come from the quality of your team, but also the depth of your expertise. Because I have seen founders, and a lot of my colleagues at other funds just see founders who are trying really hard, they're really dedicated, but they can't do it actually. They just don't have the skills, right? And so you're kind of caught in a moment where you're maybe trying to import experts or thinking about leadership substitutions. And if you had just prioritized that team quality expertise in the beginning, along with all of the other things that we've talked about, then when it was time to kind of surge forward and out-execute the competition, they'd have that edge. So yeah, that's an important thing.
All right, thank you very much, Kristen. My next question is for Oladune. Google for Startups supports ecosystems globally, right? So I want to know what specific methods or ways do you or your partners typically assess qualities like resilience, clarity of vision, for example, and how effective have these methods or techniques been over time?
Thank you. I think those things, so in investing or when you're supporting startups in the ecosystem globally, whatever that may be, it's easier to check for quantitative things than it is qualitative things, and those things are qualitative. So you may have systems in place that work, but it's never 100% foolproof. In terms of how we check for resilience, what else did you mention, please? Clarity of
Clarity of
vision.
vision.
Okay. I think the first thing and the easiest thing is just looking at what the founders have done previously, checking for staying power. We also have certain questions that we go through when we're screening, when they're filling the application form or during the interview. During the interview, we tell them, we get them to relax first, like this is just a chat, but then digging deep. And typically, it may sound very tiny, but there's a shift when you tell the average founder, oh, relax, this is just a chat, versus the energy they come into the room when they think it's like a formal interview, etc. And they're more prone to, maybe I shouldn't say this, because they're more prone to like being honest and just letting those slips happen. So asking them what the hardest thing is they've done, asking them how they've overcome certain challenges. We don't want a sub story. We want like practical, whether it was, at your previous company, a previous startup you built, or if you've been, or checking for, if they've never been a founder, checking for things like how long they worked at their previous companies. No one loves a job hopper. It's usually, except you can really explain it, it's usually a sign of something, negative. So just looking at their history, looking at what they've done. Also, I think someone mentioned how they're able to articulate themselves. It's one thing you find many founders that know what they want to do at the end, but just being able to articulate how you're going to get there. And it's not just saying how you're going to get there, but what you need to do, structure in thought, basically. So yeah, those are the things we primarily check for. And you didn't mention this, but something else that is important, aside resilience, clarity of thought, is just the ability to be honest. You don't want to deal with a founder that can't admit when they're wrong. You don't want to deal with a founder that is fundamentally dishonest. So being able to admit that they've made a mistake, and not just admitting, also quickly self-correcting and just putting on the right path. So yeah.
All right, hope we are taking notes. All right, just after just hearing you speak, I also want Jody to answer that same question, because I know that Octerra Capital, you assess countless number of like founder startup applications over time. So I also want to understand, have you taken any like approach like Oluwaduni has said, for example, workshops, what have you done? And can you give us an example of how it worked and how it went?
Yeah, that's a good question. I would say that usually, so we receive pitch decks. We are very cautious also to, I'm very big on not making people lose their time. So sometimes we receive pitch deck, we have, let's say, our internal framework that will say, okay, those are our criteria. This is the scoring of the company. If the company is passing that, then we'll speak with the company and engage. Sometimes we still engage with the company because there is still things that we can provide. It can be introduction to other people. It can be understanding a little bit the market. It can be also a potential partnership with one of our portfolio companies. I would say that in terms of workshop and things that we do a lot of, I would say, ecosystem events, but also, I would say, pro bono training and so on. So really happy to be, for example, today with the AfricArena team. And I believe on Monday, yeah, this week has been long, so I don't remember. But on Monday, I believe, I've been participating with some of the founders to a workshop just in terms of, let's say, investor readiness, trying to understand what we are looking at. We are doing that with several organizations for free, of course. The goal is not only, let's say, to build a good pipeline for us, but also to build a good pipeline for everybody. Because at the end of the day, we are not enough VC investors. We don't have enough money. But my goal is that even if we cannot invest in a company, if there is a good founder and a company that I believe that can be doing something great, they can be able to find the right pocket of money. So those are the type of things that we are doing with early stage companies, even when we are not able to invest in them.
Thank you very much, Jody.
So just also something we do, and it could be, okay. So we also ask for referrals, because I'm just getting to know you. When I'm screening a startup, we of course don't ask for referrals for every single startup that applies. But when we're getting to that point where it's like we may give you some money or we may accept you into a program, we do start to speak to previous investors or managers at previous accelerators that you've worked with, because I'm just getting to know you, but that person has known you for a while. And you get very interesting insights from these things. When we do get negative feedback, sometimes we go back to the founders. We obviously don't tell them where we heard what from, but we've had instances where people told us this is a really difficult founder and this isn't necessarily somebody you want to work with. And sometimes we take that feedback back to the founder and just see how they respond to it, see how they react to it. Do they shut it down? Do they get defensive? Which also just ties back to my point of being able to admit when you're wrong. But getting referrals also helps when you're checking for qualitative things.
All right, thank you very much. My next question is for Maya. Um, so I believe Future Africa runs programs to support founders, right? Um, so I would like to know how effective have accelerator and incubation programs, mentorship programs, how how have these programs sort of like helped you assess qualities like coachability, problem solving of the founders that you have so far like just supported over time?
Yeah, that's a very good question. I mean, for us, it has tremendously helped. So much that we actually only invest in startups that have gone through our accelerator. Um, our accelerator is, unlike most other accelerator, really focuses on business development, really getting you accelerated on that track to $1 million. So we focus a lot of our time on getting you into the right rooms, helping you shape the product, getting you your first customers, etc. And that process really helps us to see how you react to these things, right? I talked about ability to sell earlier, but how do you react to a customer introduction? And rarely the customer will say, I want exactly what you have just proposed, right? They will say, this sounds nice, how about this, how about that? And how do you react to that, right? How do you structure? And that has really helped us to get to know founders. But also just, I think it's our general belief that helping founders is the best way to get to know them, right? Because we also prefer to work with founders who we can help, right? If your problem is something very specific that we actually don't add a lot of value, that's probably not going to be a fruitful relationship, right? Because we are stuck together for a really long time, right? In at least 5 years, let's say. So we need to also, get value from each other. It's not only me getting value from investing in you, but you also getting value from the relationship. So, but I would say after the 11, 12 weeks in the program, we have worked together so closely that you sort of know each other really fairly well. And you know whether the startup now is ready to take a larger check. Sometimes they're fantastic founders, fantastic businesses, but maybe they are not yet ready to take a 250K or 500K check. So we work with them then consistently until they're ready. And others, they might be ready, and then we invest.
Thank you. Round of applause for Maya. So this is my last question, and it goes to everyone, right? So we could call it a piece of advice or just like one thing to go home with. So for the pre-seed founders and early stage founders in the room, what are those? What ways can they showcase like high impact qualities? For example, I remember we mentioned adaptability and resilience as well. So what are some practical ways they can showcase those like qualities while just avoiding events or just pitfalls that can obscure the strengths that they have? So let's start with Oluwaduni.
Maybe I should have sat over there. No, okay. No, it's okay. I'll go first. I think for me, so what are the ways to show resilience? What are the ways to show that you're a high impact founder? I think for me, and just looking back at all the founders I've dealt with, whether just interviewing them or the ones we've actually had in program, I think the founders, what I will tell you instead is the founders who have gone the farthest, and then you can extract from it and know how to act or what to show your investor. The founders who have gone the fastest and the founders who have grown the fastest or who have just, succeeded the most, in my experience, are those who take feedback and run with the feedback instantly. It's like you're giving them feedback on their products, you're giving them feedback on pricing, and it's 1, 2, 3, 4, literally in hours that night. They're WhatsApping you by 10 p.m. You speak to them 10 a.m., 10 p.m. They're WhatsApping you. They're like, oh, this has changed. This is this. We've done this. What else can we do? So those founders who execute quickly, I think are the ones, or just based on my experience, the founders who execute quickly, take feedback quickly, are the ones who go the farthest or um, have become the most successful. I think the other thing will be um, just being able to, I guess it ties into it, being adaptable. And I'll give you a very popular example. So remember they're a portfolio company for Techstars, but I didn't deal with them directly. But remember when the Lagos state government, shout out to them, did the whole ban on Okada thing. I remember how quickly Max.ng, they weren't as big at the moment. They're probably one of the biggest startups in Africa. But that was, I think, 5, 6 years ago. So I remember how quickly they just switched. There were a couple of companies at that time who the ban affected, but some of them are nowhere to be found today. So executing quickly and being very adaptable, I think those are qualities that any investor would love, and those are qualities that will make you a high impact founder.
A round of applause, please.
I will give a little bit a more boring answer. I would say even before that you can showcase me your resilience, there is one thing that I will ask to see is your pitch deck. Based on your pitch deck, I need to know what you are doing, what is the problem that you are solving, and why you and nobody else. We tend to, and it's very difficult because, to be honest, we are reviewing a lot of pitch decks, we are speaking with everybody, and at the same time, we know that when it's your company, you are deeply involved in the company. But it's also very difficult. I find it difficult to see founders that are good also at making their message very clear. And I'm always saying something is that if you have, and this is Warren Buffett that is saying that, so it's not me. Huh? Warren Buffett is saying like, if in 10 minutes he can't understand what you are doing, he will not invest. Me, sometimes I will take 2 hours. We'll do an introduction call, and I will do a second call, or I will spend some time to look at the pitch decks. So if after that I can't be able to understand what you are doing, is either it's not clear, or perhaps you are not addressing the right problem. So this is a good way to showcase to people that you are able to bring impact in your stakeholders and ecosystem.
Nice. A round of applause. That's different.
No, I'm glad that you said that you spent some extra time. Because I was going to say, some people are just not good at pitch decks, right? And we have to forgive them for that, right? So I get your point that if they can't, after successive conversations, I get that. Because I would actually say we hate the pitch deck. Because we found that some founders are very good at storytelling. Like they've crafted a beautiful story, but once you like pop open the hood, there's no customers, there's no depth, there's no real, because some people are racepreneurs, right? They're good at selling, they're good at, and maybe they should be in other people's companies helping them sell. So I think for us, what we want to see, and I agree, you can't underestimate the importance of telling your story, but I think for us, we want to see validation points, right? We want to see that even though you've not raised 50K or 100K or whatever, you're validating, you're testing, you're finding proof points, right? That you can speak to us and say to us, hey, we did this thing with 5 people, and this is what we learned. Or we did this thing with 20 people, and this is what we learned. Like, we really look for those proof points because I think, and maybe this is also more of a West Africa or Nigeria problem, but like we talk a big game, right? There's a culture of talking a big game, and so for us, I think we like to maybe push a little bit beyond the speaking and kind of look for that validation that you've actually put your effort where your mouth is. Yeah.
you very much, Kristen. A round of applause for her, please.
Yeah, I mean, I would say consistency. It's rarely a situation where a founder applies and then you accept them and then you invest. That path is very rare, right? Typically, you know these founders for quite some time. Maybe you've met them in their previous startup, or they worked for a startup where you've interacted with them, right? And they sort of kept you up to date, and you kept them up to date, right? So think of who you would like to have as your investor, and then engage with them early on, not the moment you have 3 months of runway, right? Because that's usually too late. And I know it's stressful when you're in that situation, but you now have 3 months of runway, and you're like, great, that advice is useless. But even when you're in that situation, even the investor you're speaking now might be the investor backing you for the next startup or backing you in the next round, etc., right? So think about it really as sort of a way to build relationships and not as a one-off, I'm pitching my business now. And I think when I look back at the sort of startups we backed, those were usually multi-year relationships that we had, or we helped them, they reached out for advice, they kept you up to date, and that's sort of how it went, and it built a lot of trust on both sides.
Thank you very much, Maya. Round of applause for her. So, that's all my questions. This is the end of our panel session. So I think my last words would be whether you're a founder, an investor, an ecosystem builder, I really hope that the insights that everyone has shared here today would help you build better, evaluate better, and sort of support more powerhouse teams. Thank you very much, everyone.
Okay, here we go. Thank you, panelists. So my question is not necessarily about the founding teams, but about investment itself, right? I'm asking an obvious question, but I just want to hear your opinions. So are there usually funds allocated to experiments, right? Because I work with a lot of guys in the grassroots, and one way or the other, everyone is trying to test, would this work, would this not work? And it's tricky because you also need funds to be able to test if something would work. And then there's also the extent to which you can fund to see if there is there is a glitter of hope or something, right? So yes, the question is, are there usually funds allocated to experiments? And if yes, what are the processes to this? Is this something that's discretionary, or is it usually around, oh, we have to see that there's a potential before we can commit funds to it? Thank you.
Yeah, so I'll tackle that because I think that's a big reason we actually exist. Your typical VC is gonna start to talk about their LPs and their reporting and how you kind of need to have it right. And I think for us, what we realized was that it was creating a culture of misrepresentation. So founders are not being honest and are not being forthright about the challenges that they're having. And so for us, we do actually, that's our first step, is actually supporting you to run those experiments. Because actually building a startup is a bet, right? It's a bet. But you obviously, particularly as you move further and further in the journey, you have to build a business, right? There's nothing, it's a hobby, or I don't know. But if there's no business, right, then you're not actually building a viable venture. So we do want you to get to a business, but we also recognize that particularly to be able to do something that is transformative and disruptive, that you do need to run a series of experiments. You do need to explore. I often tell people that when I was in university, we were testing OpenAI models, right? Before they were deployed to customers, before they were collecting money. And this was over a decade ago, right? And they were getting lots and lots of capital. But again, not every venture is going to be like a wildly disruptive venture. But I think particularly when you're trying to do something that moves the needle in a big way, it is a responsibility for you as the builder, as the founder, to find those resources. And those resources don't have to be VCs. I don't actually think that that is an obligation to put on venture capitalists, because venture capital is finance, right? And ultimately, the numbers have to make sense, and there's reporting that has to happen. So there's an onus on you on finding programs. And I think Mia made that point about they don't just invest in companies, right? They try to support the companies. They try to offer value. We do the same thing. So I think it's really about finding those players in the ecosystem who are saying, hey, we want to have a longer term relationship with you before we get to that check writing stage. And sometimes it's not a VC. Sometimes it's maybe a grant or a sandbox or an advisor, family, friends, and so on and so forth. So I think it's also looking beyond this idea of I want to be VC backed or venture backed. I think a lot of companies pursue venture capital before they're actually ready to engage with venture capital and what that expectation is. So I hope that answers your question in some bit. Some folks might also have some additional contributions.
Thank you. Yeah, I think they did. Okay, fantastic. Thank you so much, panelists and moderators. So you can pose for a photo, please. Oh, sorry. Apologies. You want to speak? I'm sorry. Oluwatini. Go ahead. Yes, please. Go ahead. Okay.
I'll go quickly. I think so. I agree with Christine. Not every business is going to be a VC-backed business, because as an investor, you report to your LPs, you need to be accountable, etc. But the thing is, even with grants, angel investors, except you're talking to your parents who are just going to give you the money for free, the truth is you're competing with other people for the capital, right? So at Google for Startups, we give grants, but we want to give the best people the grants. So don't lie. But if you're talking to me about your business and you're saying things like, oh, you're not sure it's going to work, why are you telling me that? Why should I give money to somebody who isn't sure the business is going to work when there are 100 and there are thousands of other people who need the money as well, and they may not be 100% sure, because there's a chance every startup will fail. But don't go around with that. If you're not sure your business will work, then you shouldn't be building the business. I hope that provides a little context. So don't approach the conversation from that, like, oh, I'm looking for somebody who's just going to give me money. The business may work, the business may not work. You need to have that, like, your passion needs to shine through. You need to be sure of yourself. You need to be telling them things that you'll be like, oh, really, it will work. Do you get what I mean? We can have a follow-up conversation afterwards.
Thank you. I think, Princess, you want to say something? Okay, we're good? Okay, fantastic. All right, thank you. Do you guys want to sit or stand for the photo op? I find that standing is just better. Thank you. Please, can we just celebrate our moderator and our panelists? Thank you. Thank you. I appreciate